So let me explain the thinking behind the pullback strategy. And it really comes down to how FX prices really move. And this is going to be important for you in not just this strategy, but all strategies. It's a very important thing to understand how prices move. If you look at prices, let's say on this axis here and the passage of time here, then most of the time, most of the volume tends to be in a concentrated area. That's where the value is perceived by the market of the particular currency, and it trades along there. Sometimes it goes above value and sometimes it goes below, but it tends to pull back around that value area. Why does it tend to therefore move above and below occasionally, but only rarely and for short spaces of time before pulling back? Well, this is the reason why markets under and overshoot. Now, this time, I've put the price up here and time here as before. And what tends to happen is prices start moving up. We get a bit confident, enthusiastic. We buy, we overshoot, and then things move back down again. It's one of the reasons, the emotional, psychological reasons why prices move back around a central level. Or put another way, let me explain it like this. Prices are like springs. They rarely ever do relax. They extend above, and then, of course, they undershoot and they overshoot again. They just move like springs, or, if you like the analogy, a little bit like prices. Like waves. They overshoot, they undershoot. Now, the biggest problem with trying to trade any of that, of course, is how do you differentiate the signal from the noise? How do you tell where is the value and where it is overextended and where it is underextended? Because actually what we see is a combination of both a trading signal of when to get in and out and a lot of noise, a lot of things moving around. If I were to simplify it, then it would look closer to this. Prices reach an extreme, they overshoot the average, and the average I've drawn here in red, and you can see it. And prices reach an extreme, in other words, they undershoot. How do we convert all of this, whether it's waves, whether it's springs, into actual trades? Well, another way is to think of it like this. In real life, this is what it'll look like. It'll trade around an average, which is where the value is. It'll undershoot. It'll pull back, it'll overshoot, and it'll pull back. And that's what we're going to try and trade. We're going to try and trade the pullbacks back to the mean. So the next question arises, how do we do that? And the chart that I've shown here is sterling dollar that you can see on screen. And it is the 5-minute chart that I'm showing you. How do we trade this notion that price is under and overshoot a little bit like a spring? That's what this strategy centers around.